We face multiple housing crises all at the same time. Mortgage rates are soaring, yet renters face a broken market with rising rent and a shortage of properties. Buying is out of reach for many, but renting is even worse. There's a growing division between an elder generation who have paid off their mortgage and a younger generation who face very high living costs. How did we get into this mess? But more importantly, can we fix it? Is there a solution? Is a house price crash just what we need to reset the housing market and make it fairer for all? A lot of renters are paying over 30% of their income in renting, which is considered to be one definition of unaffordable housing. The UK is one of the least affordable housing in the world, and it is even worse in areas like London and for those on low incomes. The first problem with the UK housing market is the sharp decline in social housing in recent decades. Since 1980, despite a rising population, the UK has seen a net loss of 1.4 million social homes, sold under right to buy, but never replaced. In 1980, 31% or 5.4 million of homes were in the social sector. By 2022, this had fallen to 17% or 4 million. The consequence is that many low-income households have been forced into a bloated private sector, which is ill-equipped to deal with a rising demand. Since 1988, the number of households in the private rented sector has soared by 2.5 million, yet the supply of rented accommodation has struggled to keep up, and this is a factor behind the rising rent. Given the cost of renting, it's understandable that the Generation Rent would love to be able to buy their own house. But this brings us to the other housing crisis, the fact that house prices have become detached from incomes. In 2022, the ratio of house price to incomes reached 9 times, a complete contrast to the post-war period where an average of 4 to 4.5 was more common. Renters face a real challenge to save a sufficient deposit, with average deposits in the UK rising to £62,000. It means it can take up to 10 years to save for a deposit compared to say 6-7 years in 2012. And of course, this saving for a deposit is not helped by cost of living crisis, student loans, high inflation and falling real wages. And this has led to another divide in the housing market between those who can get parental help to get a deposit and those who can't. Gifts and lending from parents have been a key factor in enabling some to get onto an overvalued property market, further inflating prices, but leaving a generation who aren't able to borrow from wealthy parents in despair at the unfairness of the market. And this is the problem of the UK housing market. It's increasingly causing a big divide between those who have wealth and those who don't. Given the unaffordability of housing, government policies are often focused on the demand side. For example, the right to buy is a government subsidy which enabled first-time buyers to get bigger mortgages. Rather than dealing with the underlying problem, they kind of added fuel to the fire by further inflating demand to try to keep people on overvalued prices. And it's a reflection of the short-term political fixes that have dominated the housing market. The government has spent more on help to buy than it has for home capital grants to improve the quality of houses. But even those who have been able to buy a house recently, the great British dream of home ownership seems itself to be turning into something of a nightmare, with mortgage rates soaring in response to persistently high inflation. Earlier this year, the Financial Conduct Authority has warned that 750,000 UK households are currently at risk of defaulting on their mortgage, and that was before the recent interest rate rises. For 13 years, buying a house has been very cheap because of ultra-low mortgage interest rates, and it was these cheap borrowing costs that have supercharged the market, causing prices to soar. But now the low interest rate party seems to be over, and mortgage calculations have dramatically changed. The percentage of income spent on mortgages for first-time buyers is soaring back to levels not seen since the early 90s and 2009 crash. And not only that, but with the prospect of house prices falling, many recent buyers face a risk of negative equity. In the past 2 years, inflation has soared beyond the government's inflation target, and somewhat belatedly, the Bank of England have increased interest rates really quite rapidly to try and reduce demand and reduce inflation. But the problem is that higher interest rates do not affect people in the economy equally. Those who are debt-free with high savings are actually benefiting from the higher interest rate. They get a better rate of return on their savings. Whereas those who have bought a mortgage recently are seeing very dramatic increases in their cost of borrowing. And the point is that because not everyone is affected equally, we'll have to increase interest rates a lot to squeeze inflation out of the economy. So it means some benefit, but some suffer a lot. Now at this point, there have been some calls to bail out mortgage holders to deal with the crisis. However, there are a number of instinctive problems with this. Firstly, mortgage holders are much more likely to be better off, higher income, more wealth. So it would be unfair to have a government subsidy which is bailing out a lot of people who really benefited from low interest rates, rising wealth, rising house prices. And if we bail out mortgage holders, it also ironically reduces the effectiveness of monetary policy in aiming to reduce inflation. And that's on top of the fact that UK debt has risen to over 100% of GDP, and there's a limit to how much bailouts we want to implement. Now, ironically, the government could possibly help mortgage owners by using fiscal policy to reduce inflation and not just rely on interest rates. But politically, that's very unlikely to happen. However, the rise in interest rates we've seen are very likely to cause a substantial fall in house prices over the coming 2 years. The more pessimistic house price forecasts suggest they could fall by 20, 30, even 35%. And if we saw a crash of 10, 20%, we would see an improvement in affordability, especially if nominal wages continue to rise. And if prices do fall substantially, it would give a chance for renters who may think they've got no hope at the moment, a chance to buy. It would be a painful readjustment, especially for those who bought recently, but falling house prices would make a big contribution to overcoming the very high levels of unaffordability, and it would reduce pressure in the long run on the rented sector, as some renters will be able to move into buying a home. But in the short term, are renters going to be helped by the crisis? Unfortunately not, because with higher mortgage rates and new government legislation, the prospect of house price falls is all causing some landlords to consider selling. The BBC highlights this London landlord who claims with interest rate rises, it's no longer profitable to let out a house in London. Any buy-to-let investors with only 75% loan to value will be nervously looking at the prospect of upcoming house price falls. Even limited selling by landlords will only further reduce the supply of housing at a time when renters are seeing lets snapped up. Now, one solution to high rents is the prospect of rent controls. The London Mayor Sadiq Khan has said he wants to see rent controls in London. However, the problem is that if you introduce rent controls, it will be of benefit to some, but also raises the risk of further decline in the supply of rented accommodation. Because a maximum price for rent controls would be another factor encouraging landlords to sell up or not enter the market in the first place. So rent controls, it would probably do as much harm as it would do good. It would create winners and losers. And the risk is that more people will be at risk of homelessness. Another issue is that rising interest rates also raises the buying power of cash buyers, at least relatively. In 2022, 12% of homes were bought by investors, and this is set to rise in 2023, with big corporate investors best placed to buy as prices fall. Also, the recent depreciation in the pound has increased the buying power of foreign buyers. Between 2010 and 2022, foreign ownership of UK housing rose from 88,000 to $250,000, and this amounts to around £90 billion worth of property, of which roughly half, £45 billion, is in London. It's roughly 1% of the UK housing stock. Now, Canada recently placed restrictions on foreign buyers in the housing market, and Canada has seen a house price falls quite substantial, but the impact of banning foreign buyers is relatively limited because it's only a small element of the market, at least outside London. Now, the big question is, would increasing the supply of housing solve the crisis? In some parts of the country, there's definitely a shortage of housing, but in particular, it's felt in the renting sector and the lack of social renting housing. But having said that, the supply of housing affects house prices less than we might imagine. Numerous studies have shown that if the government had built around 300,000 homes a year since 1996, its current target, which by the way is in the region of 5 million homes, it's hard to know where they would go, but even if they had built all these extra houses, house prices would only be 7% cheaper than currently. And if we built 300,000 homes a year for the next 20 years, which I very much doubt any government will be able to do because of all the NIMBY pressures that exist in the UK, it is estimated that house prices would only fall 10% due to those supply factors. So what this shows is that the overvalued house prices is only partly related to the shortage of supply. The bigger factor is the fact that interest rates have been so low, so it's so cheap to buy, but of course house prices have become elevated. Increasing the supply on its own will not solve the high house prices. Another crazy aspect of the UK housing market is the amount that the government spend on housing benefits. Because we don't have sufficient affordable social housing, in 2022 to 23, the UK spent £23 billion a year on housing benefits so that low-income groups can afford private renting. A House of Lords committee found that tenants who previously would have been living in social housing now live in expensive private rented accommodation and are subsidised by government benefits. So in effect, rather than invest in social housing, getting their own housing stock, government spending is subsidising private landlords. In the past 10 years, the government has spent in the region of £150 billion on housing benefit, but this is no investment, only a transfer to the private sector. Now, in a bid to reduce costs of housing benefits have been frozen. But the problem is that whilst benefits are frozen, rents continue to rise, and this is causing substantial financial hardship. The Institute for Fiscal Studies report only 5% of rents listed on Zoopla can be met through housing benefit. And at the same time, stamp duty rates and thresholds have been cut, costing taxpayers around £8 billion. And rising energy prices we've seen in the past year have thrown into sharp relief the need to improve the quality of housing, better insulation. The government recently required landlords to make properties meet energy regulations. Now, it's a good intention, but unfortunately, this sudden jump in costs for landlords is again encouraging them to sell, worsening the shortage. So if ever there was a good use of government spending, government borrowing, it would be to fund a general investment in insulating homes, improving the quality, both in the private and public sector. Another opportunity that might arise from a house price fall, house price crash, would be to try and rebuild the social housing sector. The new economic foundation raised the possibility of the public sector buying housing from private landlords as they sell to increase the social stock of housing. Also, another policy that has actually been helpful but needs to be extended is encouraging build-to-rent schemes. So building houses specifically to rent in the private sector, because this is where the shortage is most acute. So overall, housing supply does need to increase, but it needs to be better focused to the needs of increasing supply in the rented market and social sector, because there is a limit to how many houses people are going to accept, at least unless we start to build apartment buildings, more high-density housing. Also, there is hope in the long term that a house price correction would start to reduce some of the long-term unaffordability that exists in the UK housing market. So just to conclude, what can the government do? Well, increase supply of social renting housing, encourage supply of private rented accommodation. Number 3, allow a house price correction to occur over the next few years, which will hopefully increase long-term affordability. I hope you enjoyed this video. If you do, please give it a thumbs up. And you may also be interested in this video, which goes into more detail about the extent to which house prices will fall in the UK.